Welcome back to the Daily Crypto Roundup. In today's episode, we're going to look at how Bitcoin and Ethereum are trading as the market wakes back up, why we're seeing coordinated strength across several major altcoins, what's happening in derivatives markets, and how analysts are interpreting this early move. We'll also talk about whether this looks like the start of something more meaningful or simply a post-holiday reset. Before we get into the numbers, a quick reminder that we're running the XRP giveaway. Leave your comments on the episode, let us know what you're watching in the market or what you think about today's price action, and we'll be picking winners directly from the comments. We've seen a noticeable surge in listeners over the Christmas and New Year period, so if you're new here and enjoying the show, please hit follow and consider leaving a 5-star rating. We'd love to push toward that next milestone as we head further into the year. Alright, let's take a look at where the market is trading right now. Looking at the top 10 coins as the market continues to push higher today, Bitcoin is trading around $90,000, holding firm as buyers continue to step in. Ethereum is sitting near $3,160, moving higher alongside the broader market. Binance Coin is around $885, XRP is holding near $2, and Solana is trading around $131. Further down the list, Tron is around 29 cents, Cardano is close to 38 cents, Dogecoin is trading near 14 cents, Chainlink is around $13.20, and Polkadot is sitting at $2.13. Overall, these levels reflect improving risk appetite and a market that's regaining momentum rather than stalling out. With those prices in mind, let's get into what's actually driving today's move. As we look at these price levels, it's worth stepping back and understanding the broader context of where we are in the calendar and why that matters. Early January is one of the most deceptive periods in crypto. On the surface, moves can look decisive, but underneath, a lot of what's happening is still positioning rather than conviction. Funds that trimmed exposure into year-end are rebuilding, traders are reopening books, and risk managers are reassessing allocations after the holidays. Bitcoin hovering near the $90,000 level is significant, not because it guarantees a breakout, but because of how the market is behaving around it. Each pullback has been relatively shallow, suggesting that there's genuine demand underneath rather than purely short-term momentum trading. Ethereum is showing a similar pattern, holding above $3,000 as traders reassess exposure heading into the new year. Bitcoin's behavior at these levels tells us more than the headline price. What stands out is the lack of aggressive selling despite repeated tests of resistance. In previous cycles, moves into psychological levels like this often triggered sharp profit-taking. This time, selling pressure has been more measured. That suggests a different holder profile, one that's either more patient or more confident in the broader thesis. Ethereum's role here is also worth paying attention to. Historically, Ethereum lagging Bitcoin has been a warning sign. Ethereum keeping pace, and in some sessions outperforming, tends to signal healthier market structure. Network usage data supports this cautiously optimistic view. While we're not seeing explosive growth, transaction activity and contract interaction are clearly up from late December lows, which aligns with developers and users returning after the holiday break. Several analysts have pointed out that Ethereum's positioning early in the year often acts as a tell for risk appetite. When capital is willing to rotate beyond Bitcoin into smart contract platforms, it suggests confidence is broadening rather than narrowing. That doesn't guarantee sustained upside, but it reduces the likelihood that Bitcoin's strength is purely defensive or short-term. Altcoins have also joined the move, but in a selective way. XRP has been one of the stronger names on the day, benefiting from broader market strength rather than any single headline. Cardano and Dogecoin have also moved higher, reinforcing the idea that this isn't just a one-coin story, but a broader re-engagement with risk across the market. Derivatives markets are adding another layer of confirmation. Open interest across major futures platforms has increased, which tells us that traders are putting capital back to work, rather than staying entirely on the sidelines. Importantly, funding rates remain relatively contained. That suggests leverage is building gradually, not aggressively, something analysts often view as healthier than sharp, overextended moves. James Butterfill from CoinShares commented recently that early January is typically more about repositioning than outright conviction. Funds that reduced exposure into year-end start to rebalance, while traders test levels rather than chase breakouts. That fits well with what we're seeing now. Strength, but measured strength. There's also been a noticeable divergence between spot market activity and ETF flows. While some Bitcoin ETFs have seen modest outflows recently, spot market demand appears to be absorbing supply effectively. Analysts caution that ETF data around the turn of the year can be noisy, as portfolio rebalancing and tax-related adjustments often distort short-term flows. Ethereum has also shown encouraging signs beyond price alone. On-chain data points to increased transaction activity compared to late December, suggesting that users and developers are returning after the holiday period. While this isn't a dramatic spike, it supports the idea that network usage is stabilizing alongside price action. Before we move on to today's big XRP story, we are going to pause here for a quick word from our sponsors. Stay with us. One of the more interesting stories driving sentiment today has been renewed strength in XRP, which has outperformed much of the market following developments around the U.S. Securities and Exchange Commission. Traders have been reacting to confirmation that Commissioner Caroline Crenshaw will not be continuing in her role, a change that some market participants interpret as a potential shift in tone at the regulator as 2026 gets underway. It's important to be careful here. This is not a policy change, and it doesn't mean the SEC has suddenly become crypto-friendly. But personnel changes at the top of regulatory bodies do matter, particularly in a space as politically sensitive as digital assets. Markets tend to move on expectations before outcomes, and today's price action reflects that. XRP, which has long been viewed as one of the most regulation-sensitive assets in the market, responded quickly. Traders see any sign of a less confrontational regulatory environment as supportive, especially given XRP's history and its close association with Ripple. That sensitivity is why XRP often moves sharply on regulatory headlines, even when no immediate legal or procedural changes follow. Several analysts have cautioned against overinterpreting today's move. While a change in SEC leadership can influence priorities over time, regulation evolves slowly, and enforcement frameworks do not disappear overnight. Still, the market appears to be pricing in the possibility that 2026 could bring a more balanced regulatory approach, or at least fewer headline shocks. For now, this story is less about what has changed, and more about how traders are positioning ahead of what might change. XRP's strength today reflects that forward-looking behavior, a reminder that in crypto, perception and expectation can move prices just as much as confirmed outcomes. Another factor worth watching is the broader crypto market capitalization, which has pushed above a key technical level that capped price action toward the end of December. Technical analysts often stress that these early breaks are signals rather than confirmations, but they do suggest the market is attempting to reset its structure for the year ahead. Retail engagement is also picking up, though it remains far from euphoric. Exchange activity, search interest, and social engagement have all increased modestly, indicating that sidelined participants are starting to pay attention again. This is often how early year moves begin, gradually, not explosively. Jeff Kendrick at Standard Chartered has noted that while short-term volatility is likely as January unfolds, the broader backdrop remains constructive. He's pointed out that institutional interest hasn't disappeared, but has become more selective, with capital deploying cautiously rather than rushing in all at once. When you put all of this together, today's price action looks less like a random bounce and more like the market coming back online. There's no single headline driving everything. Instead, we're seeing improved liquidity, steady buying, and early positioning for the year ahead. Our take on this is fairly straightforward. This doesn't feel like a blow-off move or a speculative frenzy. It feels like the market re-establishing itself after the holiday slowdown. That doesn't mean we go straight up from here. Volatility is almost guaranteed. But the tone is constructive rather than fragile. The key question now is whether this momentum holds as more data comes in and more participants re-enter the market. If buying continues to absorb dips and leverage remains controlled, that sets a healthier foundation than the kind of sharp, unstable rallies we've seen in the past. That's it for today's daily crypto roundup. Don't forget to leave your comment for the XRP giveaway. Hit follow if you're new. and consider leaving a 5-star rating if you're enjoying the show. Drop your thoughts in the comments, and we'll be back tomorrow to break it all down again. And as always, we will see you at the top.